Hello, it's Saturday. It is the 25th day of February 2017. Let's take a look at the Bitcoin chart, which is at close to noon Eastern time and at 11:33 or down about 4%, coming off an interesting session in which it retraced back down a decent amount and recovering all of its losses back up to its new highs. And a bullish setup has been going lower so far. Meanwhile, this uptrend still price actions well above this rising 18 average band. We look at the pattern of higher highs and higher lows. I'm not going to count a low unless it can at least go through this band, sort of like it did in here. And is this going to rebound? Well, we can only look at this going short term because this period says a lot. So I'm going to put a 15-minute chart which comes from this high, and it spans the last day and a half or so. So this is the high and the very fast sell-off that occurred, bringing price down from 1215 down to about a little under 1100. That was a loss of about 8-9% right quickly, and then it bounced much higher quickly again. Looking at Fibonacci retracement, this brought an interesting pattern to say the least, because we find support in here and then for so long it just does a whole bunch of nothing. Meanwhile, it's supporting the key Fibonacci level. And then and here's where it gave in, and this is where it stands now. Now, as far as technical analysis is concerned, we look at this within the 18 average band. It obviously, within this fast move, regained it really quickly in here. And then it got up to established resistance. And then this support level broke, making this the next leg lower or another established key point, because as this was moving further, we knew in here that breaking below this line had a test of here, and breaking above this had a test up to the previous high. So when you're looking at the range, you don't know where the next day trade is, but you know it's either or, and it worked out to be the downside. How did it work out? Well, here's the break below. So for myself, as this was going below and going higher, I put the small order into short here and to cover, and sure enough, it ends up winning. Within the original short, you put your stop to be a failed move, probably somewhere above here somewhere. Then as it goes lower and back higher, obviously it didn't come through, so you'd adjust this level up here as it's at this point. And then as it's going through, you might adjust it here, and then you just profit take regardless of what happens. At this stage, that is my methodology towards such. Now within the levels that we see as it stands, it has pierced below this. However, if you use this as a key Fibonacci high, then the number would be right around here. So it's still a Fibonacci level. However, because this level has been established decently, if this shows any weakness going below here, then maybe there could be further decline back to yesterday's low. And then to reverse this trend over, it's got to at least stabilize, go sideways, but break, of course, this 18 average, which is declining, and revert it over. On the short term, that's got a decent ways to go. But overall, of course, in the solid uptrend, breaking down below this level in here, we can put in this band towards this level, which should be about 1,000 to about 1050. And that's, of course, on the situation of the break, but it would be this little area here coincides within the 18 average. So I think the strongest Fibonacci support, because this level was tested yesterday, will be roughly at about 1050 to 1060 on the further break. And then breaking above this resistance point, well, let's get some Fibonacci going. And what I will do is I will take a look at what we're going to do is we're going to take a look at the high, which is, I got it on the screen, 1220, and 1091 as the low, which 1307 would be the next near-term target. If, of course, this thing can end up breaking above this range, and this does become the failed sell-off, that would be my upside target. And thank you for tuning in, and have yourself a great day. Bye-bye.